Good morning, everybody. Welcome to another day Market Report brought to you by Mike Perk. Today is Tuesday, December 9th. We got a couple economic news releases scheduled for today. We'll start off the NFIB Small Business Index. This is the confidence, a survey that's brought out to see what the confidence in the new businesses or small businesses are out there. And we had a 96.1 back in the previous reporting of October, and it increased to 98.1. So small businesses are feeling a little bit better about where our economy is, where things are moving along. Good, that's good news, as they do represent the majority of the jobs out there for the American public. So that is definitely important. Also, on the other hand, we got some minor reports like the job openings for the month of October. So September we had 4.7 million job openings. It increased in October to 4.8 million. Wholesale inventories for the month of October, we had a 0.4 back in September, and it remained that same 0.4% growth for October. Headline news: the stock market's down. The Dow is actually down over 200 so far this morning, but it's kind of pulled back since we've started this. But it's still down quite a bit. A lot of it has to do with the markets overseas. China came in and kind of surprised the markets by coming in. They want to restrict low-grade corporate debt in the market. So basically, they're telling corporations we're not going to take any more what they deem as low-grade and create more of a financial, a mess basically. So that represented about 60% of the market for their bond market over there, which kind of surprised the markets and shook up, the Asian markets over there. So basically, they're having an issue over there where especially local governments are getting way over their head in terms of debt, and some of them got possible payments coming up next year, and may have a hard time making those payments. And their federal level government basically said, we're not going to help bail you guys out. You guys are going to have to figure this out and get yourselves out of this and get more of a financial constraint. So basically, they're going to settle for short term, probably slow down in growth, and try have more long-term stability here is what they're kind of thinking. And it's a good idea, actually, as a lot of these governments, us included, get kind of in over our heads. Also, European markets, there's concerns because there's some Greek elections going on, and then, of course, falling oil prices, so there's a big sell-off in Europe. We kind of follow suit with those guys, but there's also concerns with what's going on around the global. But there's a Wall Street Journal article that came out talking about possibly basically about when is the rates going to be hiked. It's basically inevitable with the we're getting to more of a normalcy here in our economy, and with the rate hike. But with all these other these countries probably putting in the real concern lies in with these other countries struggling and possibly even doing stimulus packages that will reduce the value of their currency, which will make the dollar stronger, and that could slow us down long term, or or at least in the intermediate term, when and if that happens and stuff. So that's a bit of a concern, especially if we start raising rates. All right, let's go ahead and take a look at the bond market. We're having a sweet rally over here. So as you can see, we're up over the 104 level here again, and had a big spike. So we're getting a nice little rally in the bond market, which is boding well for interest rates. So interest rates are the current home loan current interest rates for home loans today are actually a bit improved compared to yesterday. So the short term, how long this lasts, this could be very short term as they get over the fears of what happened in China and Europe, or even this rate hike. This could dwindle this week, so we could see this a short term little spike in improvement in the mortgage interest rates trends. Could have this little short term spike. But long term, obviously, it will start going downwards as we get to the point of maybe raising interest rates. That actually might help us out a little bit further, come think, because typically when the Fed's raising interest rates, long term rates actually improve a little bit, primarily because it's showing that the Fed is keeping inflation in check, and that's biggest currency. So we could have long term, like 30-year fixed, have a slight improvement in interest rates as the Fed starts raising interest rates as well. Alright, folks, you guys have a wonderful day. We'll see you guys tomorrow. We do have a few economic news on the docket tomorrow. And then Thursday will be kind of bigger with the retail sales coming out. Alright, have a wonderful day. Thanks so much for watching, and we'll catch you guys tomorrow. Bye.